The NYSE American is closed, so the most recent definitive closing price for Hyperscale Data Inc. GPUS is $0.403 from the close on Friday, October 31, 2025 at 4 p.m. Eastern Time. That final price reflected a significant dip for the day, closing down 5.49% from the previous session's close. Now, what the headline closing number doesn't tell you, and what's absolutely critical for anyone looking at this heavily discussed and often volatile name, is the sheer institutional conviction that's been brewing underneath this seemingly collapsing penny stock. You'd think a company that has shed over 93% of its value in the last year, trading in the sub-dollar range, would be completely abandoned by serious investment players. That's the surface-level expectation, the reality that most casual observers internalize. A stock this cheap is a speculative dart throw, best suited for self-investing experiments on a platform like Robinhood, or perhaps a small high-risk allocation within an individual brokerage account. But the deeper, more unexpected truth is that several filings point to a noticeable, persistent accumulation of shares by certain institutions in the low end of this stock's recent range, particularly following the major announcements around their Bitcoin treasury and the NVIDIA GPU cloud initiative. This isn't just retail enthusiasm or short-term noise. It hints at a calculated, long-term bet on the underlying assets and the highly publicized strategic pivot of a company that was, not so long ago, known as Alt Alliance. This tension between the dramatic price collapse, the expectation, and the smart money buying up, the reality, is the whole story here. And it's why Hyperscale Data demands a closer look beyond the shocking price chart. Recent stock movement and institutional play. The dramatic price action in Hyperscale Data stock has been relentless, characterized by extreme volatility and colossal trading volumes. For a stock with a relatively small market capitalization, currently sitting under $80 million, the daily trading volume is often astronomical, as evidenced by the 65.5 million shares that changed hands on Friday. This type of volume, sometimes spiking to hundreds of millions of shares, is a clear sign that sophisticated traders and high-frequency algorithms are working this name constantly. The stock price has been crushed, moving from a 52-week high near $10 down to the $0.30 to $0.50 range, a performance that is brutal by any measure, and a perfect example of why sound online investing practices are key, especially with microcap companies. The immediate narrative is that the company is simply failing to execute, is heavily diluted, or is drowning in debt. These are all valid concerns, and they form the common ground of investor anxiety. However, the last few weeks have provided a fascinating counter-narrative. The 26% surge following the announcement that their Bitcoin treasury had reached $68.8 million was a stark reminder that this stock is incredibly sensitive to digital asset news, and that the market is paying attention to their strategic moves. Furthermore, the commitment to deploy 2,000 Bitmain S21 Pro Bitcoin miners, replacing older, less efficient units, signifies a serious, capital-intensive move toward improving profitability in their mining segment. What the market may be failing to price in correctly is the potential for this high beta name to perform if Bitcoin's price stabilizes or moves higher, effectively turning the stock into a leveraged play on the cryptocurrency. A savvy investor using an advanced platform like Interactive Broker's trading interface might see the extreme volume and the low price as a sign that the stock is being strategically shaken out of weak hands, ready for an eventual upward correction, assuming the underlying business holds up. This is a classic contrarian position that challenges the general fear-driven expectation. World navigation, challenging the narrative beyond Bitcoin mining. The dominant market belief right now is that Hyperscale Data is primarily a Bitcoin miner with some struggling legacy businesses tacked on, and that the stock's future is therefore entirely dependent on the price of Bitcoin. We need to challenge that by looking at the company's biggest long-term announcement, the plan to launch an on-demand NVIDIA GPU cloud service from its Michigan facility in the first half of 2026. This is where the name Hyperscale Data starts to make more sense than its previous identity. The market is skeptical, viewing it as yet another press release promise from a heavily indebted small-cap company. Yet the reality is that the move directly targets the explosive demand for high-performance computing power necessary for generative AI, a sector where access to high-end NVIDIA stock GPUs like the H100, B200, and B300 is scarce and expensive. If they can successfully execute this pivot and deliver scalable, on-demand GPU capacity, a true picks and shovels approach to the AI boom, the market's expectation of a simple, volatile Bitcoin miner will be shattered. The key here isn't just the cloud service itself, but the nature of the infrastructure. A massive 600,000 square foot facility designed for high-density computing, capable of supporting both crypto mining and AI workloads. This dual-purpose capacity suggests a much more diversified future revenue stream, one less reliant on the volatile price swings of a single digital asset. The recent announcement that the Ask ROI subsidiary has surpassed 1 million app downloads on the Apple Stock App Store and Google Play is another small but significant sign that diversification is happening across their corporate structure, which further complicates the simple, bearish narrative. Even a small-cap stock needs a full, well-researched picture, and simply checking a quote on the SoFi Invest app isn't going to give you this context. Auditorium navigation, business structure, and financial reality. To really understand hyperscale data, you have to look at its unusual, diversified structure. This is a holding company, and before its name change, it was infamous for its sprawling acquisitions. Its current operations are segmented: technology and finance, Centenum, crypto and co-location, energy and infrastructure, and a few others. The core business, the one generating headlines, is through its subsidiary, Centenum, which owns and operates the data center for Bitcoin mining and the planned AI co-location. They've been steadily increasing their Bitcoin treasury, targeting $100 million, a significant amount relative to their current market cap. The company's long-term plan, announced with the Series F preferred stock offering, is to divest the other parts of the company under the former Alt Capital Group Bank in the second quarter of 2026, leaving Hyperscale Data as a focused owner and operator of data centers and a holder of digital assets. This massive, unpriced catalyst is imminent. Now for the elephant in the room, the balance sheet. As of the most recent public data, the company carried a substantial debt load of around $109 million against total equity of less than $8 million, resulting in a very high debt-to-equity ratio, a clear warning sign for anyone doing due diligence, whether using Fidelity's analytical tools or a basic screener on Schwab Intelligent Portfolios. The high debt is the reality that grounds the lofty expectations of AI and Bitcoin booms. It means that the company needs to execute flawlessly on its AI and mining strategies just to stabilize its financial position, let alone deliver massive shareholder returns. Cash and short-term investments stood at over $26 million, an improvement that buys them some runway, but the necessity of strong revenue generation from the new focused business segments is critical. Past performance is painful to look at, with the stock's precipitous fall being the result of sustained losses and high operational costs. Rocket navigation, future outlook, catalysts, and key risks. The future of GPUS is a high-stakes bet on execution and commodity prices. The primary catalysts are centered around the AI cloud service launch and the Bitcoin price movement. AI cloud execution. The official launch, and more importantly, the securing of anchor tenants for the on-demand GPU cloud platform will be the most potent catalyst. Proving that they can compete in the high-demand AI infrastructure space will instantly re-rate the stock, moving it out of the meme stock category and into the infrastructure play bracket. Bitcoin Treasury milestone. Hitting the $100 million Bitcoin Treasury target, especially if it coincides with a general upswing in the crypto market, would provide a huge boost to the company's asset-backed value and reduce reliance on external financing. Corporate simplification. The planned divestment in Q2 2026 will clean up the highly complex corporate structure, making the resulting entity a pure-play data center and digital asset holding company. This is a critical step for improving transparency and attracting institutional interest from larger funds that avoid convoluted holding company structures. The risks, however, are as significant as the potential rewards, reinforcing the expectation versus reality dynamic. The market expects them to fail on the AI promise because of their history and debt. The reality they must create involves overcoming debt servicing. The high debt load is a constant drain on resources, requiring significant cash flow simply to service interest payments, which limits growth capital. Any misstep in generating revenue will quickly trigger liquidity concerns. Competition.